So one of the things what I have been seeing is VIX. Every time, look at how many times VIX came all the way to this 36 level and turned around. So this 36 seems to be a very important level. So anytime VIX comes to 36, I mean, there might be a chance this might happen, but the probability of this happening isn't a lot. And anytime it's moving all the way from, I mean, if VIX moves sideways and then breaks out, then that will be a totally different, there will be much more panic. So whenever VIX comes to 36, I would say, just be careful with the shorts, or you should be prepared to get out when it turns around. So last night it went to 36 and it stayed for not long. I mean, I think it stayed for how much time? 3 candles, not even 3 candles. So about half hour, and it turned around. There is a possible, I mean, a lot of, this is how institutions think, right? What is the place where there might be a reversal? So they start accumulating every time it hits the 36. And how many times in the last few years it stayed above 36? That's your 2018 correction when Powell increased the rate, and again in 2020. Other than these two, we don't have many times where VIX was closed above. This is one day, I guess 2 days here, and this is all part of the 2020, right? So this is another day in this entire year. And this year we are seeing, a bunch of touches. So anytime VIX touches 36, I would be a little careful about, going shorts, going in with a lot of shorts. As long as we are ready to get out as these levels test. I mean, the other thing is don't trade at all when it tests 36, just wait. So, but I would like to have some positions and prove me wrong so that I can get onto the other side. And I always have a focus list, which generally helps me figure out which ones to get into when, what is the other one? When it turns around and for me, to get in. So where's Valero? So that's how I got into Valero at the end of the day yesterday. And that chart, while the market was going down, look at how Valero is doing. And this is probably, sometimes Market Smith is much better. So look at, if you look at this chart, you would not think that market is going down at all. So now we have a couple more resistances to the upside. And if if it breaks that 127 level, is that 127? 126.98, it's off to the races. So this is as if, market is in a bull market, and looks like the energy sector is that way right now. I tried to do some of the the tech stocks, for the turnaround and everything. It never worked. So that's when I have decided, okay, when I go long, I'm gonna go long the commodities, and when I go short, I will probably look at the tech. Let me show you. Where is that? Can you see my Google Chrome? So this is how I did for the first 3 months. And on April 1st, I sold everything because that's when we got a reversal in NVIDIA. And since then, it's been going, this is my returns for the year. So it's been going straight up. The only reason it's doing that is because, you know, I'm only going long the commodities and not the tech anymore. And this is the time where I was trying to bottom fish the tech, and you know, but it did not work. So
Is this your portfolio return report?
Yep.
What is this overview report? Is it available to everyone, or is it
No,
something?
it's a trader sync. It's an app that you can download. I mean, you have to pay for it, obviously.
Okay.
But I mean, this gives me a good idea of where I'm screwing it up. And look at that.
How much is this? The monthly or
100 something. It's been a while. I've been using it for a couple of years now.
Hundreds every month or 100 per year?
No, per year.
Yeah.
Per year, yeah.
Okay, not bad.
Yeah. Generally, a lot of people would have their own journal, but with the number of trades I do, I can't maintain a journal. I mean, so but this one really helps me. So anyway, talking about Valero, this if this breaks that, I was saying that 127 level, this is going much higher. Excuse me. And that's a nice rounded bottom, and it might move sideways for a few days. I mean, this could take a while. This could take, you know, another couple of weeks to break that 127 level. And sometimes what happens is we get the we would get the handle right here. Instead of getting a handle here, you would probably get a handle here. And if you get a handle here and breaks out, let me show you. So let's say we get a few days of consolidation, and if it breaks, probably another couple of days, I guess. And if it breaks out of here, then this may not be a resistance anymore. It will go straight up. So the other scenario is it will go all the way to 127, then we'll see a handle and a breakout. So but if it whenever it breaks out, I think I'm going to take a bigger position. And also it also depends on how the market is. So anytime market bounces, going long energy is working well. So it's not just blindly buying these anymore. Market has to move higher. I mean, it doesn't have to go to new highs, but even a bounce, this is where the longs are supposed to be to make money. And I tried many of these coal stocks, but I mean, it worked. Some of them worked, but the problem with coal stocks is look at how big those candles are. That's 8%. That's average true range is $12. So it moves 8 to 9% on every day. So this is something, I mean, only if options are available, I would try, or else I wouldn't. Anyways, let's talk about VIX again. So the next time the market might stall if it starts moving higher from tomorrow after Powell is when it comes back to 20. So this trend line seems to be working well. So when it hits 20, that is when I would probably get rid of most of my longs. So far, this has been working very well, right? So any questions on VIX?
So when it breaks 20, that's when we can get into longs.
No, get out of longs. You should get into longs when it hits 36. That's why I got into longs today.
Okay.
But
But
go ahead.
yeah, when I say longs, like, the long stocks, not the options.
Right now, okay, for us to go, for me to go long on options, I need a follow through day. So what does that mean? I mean, we talked about follow through day before, but if this is the day one and today is day two, after day four, if there is a follow through day, that's when I'll probably go long. And many of the O'Neill disciples will probably, most of the growth investors will follow the follow through day, and then they'll go long. So right now,
Yeah.
market is in correction.
Yeah, the follow through is like 2-3 green candles, right?
No, so follow through is, so here the follow through is this day. So this is day 1, 2, 3, 4. So this is not a follow through day. So follow through day comes after day 4. So this would be a follow through day. Actually, no, this is not. I'm sorry, that's not a follow through day. And the volume has to be higher than the day before. I guess follow through day was this day. So there are a couple of requirements for us to have the follow through day. It should have higher volume. Okay, it cannot be before the 4th day. I mean, it has to be 4th day or later. So this was, I think, what is that? 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 16. Yeah, 17. I think 17th day, or is it this one? No, it's this one. So, but what we will also see is a lot of stocks will start to move higher. We will see that too. I mean, not only we will see this in the index, but a lot of stocks will start moving higher. So again, this will be an indication of for us to go long at least 2 or 3 positions once it starts, once we get the follow through. But I'm also watching which stocks are doing better. I mean, today the reason to go long Valero yesterday was, the market still is in correction, but the energy stocks are doing good. So if you can find a sector or industry that's actually doing good and hitting new highs, that's the place to be. So let me go to MarketSmith. I think let me show you what I look at. So whenever I see a stock that's doing good, I go to the industry, and that's not the only one that's making a new high. That's PBF that made a new high. VTNR, it's almost at the new high. Well, I wouldn't trade anything that's less than 2 billion generally, at least a billion, nothing less than a billion. That's Olero. DK, this one broke out today. I mean, if this was if we already had a follow through, these are the ones to be long. So that one looks pretty good. This one looks pretty good too. CVR, Marathon Petroleum. I mean, there are plenty of stocks that are hitting new highs. So that's in refining, and today we got ExxonMobil, right? The alert. Look at that. I mean, it's not far from its 52-week high. So when you see a total, a bunch of stocks in the industry moving higher, you can always go along those stocks. So I had an alert here, when it broke out of this red candle. We'll probably see a lot of buyers when this breaks this level. However, it felt to me that XLE is probably better because XLE is, it's 2.8%, much similar to ExxonMobil, and it's outperforming ExxonMobil. So this is only 2%. So I thought, ExxonMobil, XLE is probably will do much better than ExxonMobil. So that's why I got into XLE. And whenever, if you're not trading any options, you could always go along, smaller positions in the charts that you like. You don't have to always sit on the sidelines unless we get the feel for the patterns that really work for us. I mean, that's the whole point of this group, right? I mean, to learn what patterns make sense to you. And this is how you can educate yourself. What are the patterns I am looking for, and what are the ones that are not working for me? Okay. So, by the way, VIX is something I have been watching for a while, but this is something that has been working well. So I started using it this year. So, okay, let's talk about this trade. Did anybody take this trade in this group right now? The SPY selling the selling this ratio spread and buying this call spread. So let me show you what are the levels that are important. So this 350, that's the 50% retracement, 349. So if it comes to 350 even faster, it is going to bounce off of here. So that's why we have over 350, 345 spread. The other spread that you could think of if you want to be more careful is 320, but you would probably have to go further into the next month or the month after. Going into the Fed, this thing only made sense to me because I'm not investing. I mean, I'm not putting any debit into it. So I mean, even if the Fed screws up, it should probably come here and probably bounce. It may not even. Last week I had ratio spreads against 380 that expires this week, which I closed yesterday. So whenever the fib retracements or for the long term, they are very, very, very powerful. Everybody is watching it. Short term, long term, everybody is watching it. So generally it bounces off of that level. All right. About the platform, yeah, I mean, this is Thinkorswim. This is the only thing I've been using, I don't know, as long as I remember. I think since 2011, I think 2011 or 2012. When to take profits. So this is something, the profit taking generally depends on the size of your portfolio, how many contracts you should buy. Totally depends on your portfolio. And this is something that you have to do, do a trial. You take three options or a set amount, and based on that, see if it's working for you or not. Or sometimes what happens is, I mean, my portfolio has grew a lot in the last 3 years, and now what happens is, and what's happening for me is, I was doing smaller trades during the start of this year, even last year, but it was not enough to move my portfolio at all. So you can increase based on how much makes sense. I mean, sometimes just a dollar number is hard to, if even upside it might it feels good, but on the downside sometimes it's hard to digest. So that is something that you have to do a trial and error and figure out which one makes more sense. And and I have been doing this 1/3 for a while. You take 1/3 and you have a little bit of cushion so that even if it turns around, you don't lose any money. And in this market, I don't want to wait longer. I mean, faster you take little bit of profit, have that cushion. If it turns around, you get out, with very small loss or, no loss at all. So that is something you have to figure it out all by yourself. All right, let's go to Nasdaq Composite. I mean, I know we can look at all the levels, but I would say tomorrow is crucial, obviously. And if there is a hint of doing, I mean, now they have May this month and June and July, I think. So I don't know if they have August or not, but so if they say that they're going to do 50 basis points or increase the interest rate 50 basis points this month, next month, and the month after, I think that would be a positive thing. And I have also mentioned that there is a 94% probability that there is a 75 basis points increase in June. So what is market expecting, and and their tone, and we don't have to worry about these numbers. The only thing we need to worry about is how is the market reacting to whatever they say. That's the best part about not being wasting any time on figuring out the fundamentals of this. So that's your composite, and if that breaks, you have this 11,000 and 10,200. There is something I wanted to show you. Let me go to where is that trade? Where is mine? This one. Give me a second, guys. I just drew some lines. I can see it now. Okay, it's here. Yeah, that's so. This is a chart from 2009 to until now. So it has been in this range from, let's say, what is that? That's July of 2009, and it has been moving, even during the pandemic. And then before I say anything else, this is not a regular chart. This is a log chart, and log chart has worked very well so far. So now this is all excess. So when did the excess start? That started from July of 2020. Generally what happens is, I mean, again, I'm not trying to scare you. We're going to trade based on what we see on a regular basis. So, but what are the possibilities? Anytime it goes up higher, it also breaks the lower channel, and then we will see market bounce back. So the first would be halfway. The first support would be halfway, which is about 11,600, and the lower level is around 10,003 or 10,500, but it could extend more to the downside before it starts moving higher. I mean, I know these things, when I look at it, it is scary. We don't have to trade based on this, but knowing information like this always helps. The panic happens when it breaks this level. Well, I'm sure a lot of people are looking at the same thing, what we are looking right here. So even though we had, really a lot of destruction in stocks like Square, PayPal, and everything, indices haven't really budged. I mean, NASDAQ is down 19% with, if you think about it, that's 2018, right? So I'm trying to see where we started in 2019. Oh, this is where we started in 2019. So in 2 years, it went from 6,000 to 16,000. 2 or is it 3 years? So that's huge move. Generally, this is how most of the corrections happen. And then one of the reasons I was saying that it's better to go stay with other longs in other sectors is because if you look at S&P 500, this is a log chart too, but S&P did not ever break this channel. I mean, obviously we have seen how some of the NASDAQ stocks have went up, and even the stocks like Google and everything, they went up a lot. These are really huge moves. So it went from 1,000 to 3,000. So it tripled in, let's say, 3 years for such a big company. So we will see. I mean, it makes more sense for them to reset and come back to the, their trading channels. So when you look at all these things, I mean, there is a lot more to go to the downside. So anyways,
KP, that NASDAQ that you are showing, right?
Yep.
That's the, so why can't we see that in the toss? Why do you go to?
Well, there is no log chart for toss. There isn't.
Okay.
Yeah.
So we can see that only in the log chart.
Okay. So there are, yes, I mean, that's what it's showing right now. But my point about that is, hold on. My point about this is you need to do the analysis based on what makes more sense, right? I mean, I'll show you something else actually.
This log chart and regular chart are not same. That's what you're saying.
No, logarithmic charts are, so they are ratio based or exponential chart, right? This is an exponential chart.
Yeah, I don't understand like different types of charts, but yeah.
Well, yeah, well, generally in any charting, right? If you look at this is your regular chart. Okay, you can't you cannot draw a channel right here. The channel would start here and it goes up like this. So, and then most of the cryptos, this is what we do. I mean, because the moves are much bigger, I mean, only log charts work. The regular charts does not work at all for cryptos.
So when you say log, so the high frequency traders or a high frequency, right?
Yep.
The institutions, right?
Yep.
They do use this log chart. That's what you're saying?
They use everything that's available. So there's something else. TNX, is it? Yeah. Look at this one, right? So that's your 10-year. I mean, Carter Worth was using log chart to show this 10-year yield, how this log chart has worked very well over the, since 1980s. Every time it tested that, it came down, tested, came down. So, I mean, when I saw this, I thought, I should probably use it for NASDAQ because NASDAQ has went exponentially higher in the last few years. So this into a monthly chart. We can see this probably better. So we had 1, 2, and that's your first test, failed. Second test failed. Now it's actually breaking out. So this is a really bad thing. I mean, unless it comes back below this trend line, and then this is a log chart. This is your regular chart. You can the trend line does not make any sense here at all because there is no trend line other than, drawing from somewhere here to here. So whatever chart makes sense for the data points that we have, that is something, we should be using. So yeah, because it broke this, everybody's watching this, I'm sure. And we don't know how far this is going to go. And if you guys, I don't know how many of you are looking at take on the market. I'm pushing it. I'm pushing as much data as I read every day. If you look at this, we had a 20 years of inflation. Okay. And since 1982, the inflation has been going down. It means that we haven't seen in our lifetimes, we have no clue what is going to happen here. And this has been a hard time for, even the markets. I'm gonna also show you the S&P 500, how it did over this time. It's not all bad though. So in terms of inflation, if this is what is going to happen for the next 10 or 15 or 20 years, the stocks that are going to do better are definitely not tech. It's going to be, commodities. So something to, remember on the back of the mind. And S&P 500. Sometimes it's hard to, explain. Explain. Yeah, go ahead.
Yeah, sorry, Tandra, but you said tech stocks will not do, right? So, but back in like 60s to 80s, like, there was no tech, I guess, but in the new tech world, how is that even possible?
Well, we will see. Obviously, there. I think the technology at that time was. Somebody was saying that the technology in 70s were railways. That's or anything related to transportation was the technology at that time. So again, one of the reasons that tech may not do well is because right now we give a lot of importance to the growth part of the tech stocks. So even though there is not enough profits, the reason they go up is because you are expecting the future profits, you are discounting the future profits and giving it a higher valuation. But if it's very hard to borrow money, or to borrow money if it costs more, then their profits are going to be much later than anticipated, when the rates are much less. Well, that's the fundamental aspect. But simply put, when the inflation is higher, tech is not gonna do great. So I was watching this. I was looking at these charts yesterday, and S&P. So the chart I was just showing you, that's monthly. Max. What is max? This is still 90s. Huh. Hold on. I don't know where I saw that yesterday. I was sending it to one of my friends yesterday. Oh, it's SPX. That makes sense. There was no ETF at that time, obviously. So here is from can you guys see the Thinkorswim?
Yes.
Okay, thank you. So it's from 60, a little bit more, I guess. 60. Anyway, yeah. So it's from 60s to 80s, right? So if you look at this one, right, even though it tripled in this, it went from 60 to almost 200, but we had a huge correction right here, 50% correction. That's what is that, 120 to 60. That's one of the problems of having inflation. We could have a bigger correction and then the market can move much higher. So a lot of people are talking about these 60s, or people who have traded in their 70s. This is what they have gone through. Again, nobody knows how it's gonna end up this time. If they can do a soft landing or a hard landing, or we will know. I mean, how the Fed is gonna maneuver these through this times. But every time I see somebody like Paul Tudor Jones come out and say, he was, if you guys watch that video, it's very funny. He was saying, what is his, the CNBC guy was asking him, what is his suggestion for Powell? He said he should probably find another job. That was his suggestion. I mean, he was saying that this is probably one of the toughest times in our lifetime. So when this guy has made most money in the market than anybody in hedge fund industry. He made the most money during 1987. He does both shorting and also he goes long. There are plenty of videos online on YouTube. I might have also posted it before. Check it out. I mean, he knows what he is doing, and he never really lost any money. So,
Hey, KP, I had to step away for a few seconds. Whom you're talking about?
Paul Tudor Jones. I put his video on.
Yeah, you posted. Yeah.
Yeah.
Okay.
So I mean, none of us has that kind of experience. When people who has a lot of experience, even though we don't know how they are trading, at least learning what they know or what their opinions are gives us an idea of how invested we should be in the markets. Anyways, let me go through all the indices or the futures, and then I'll take some questions. So that's S&P 500. Again, all the levels, we don't know the exact levels, which one would be better until day after, or sorry, tomorrow, not day after, tomorrow. So one of the reasons we might get a bounce is because we are way oversold. I mean, April has been the worst month for NASDAQ since 2008. So when you hear, I mean, I was talking about this, when you hear statements like this, it means most of the market is very bearish right now. I mean, they are all losing money. That's how they are bearish. So my guess is this will probably come back and test 50 or probably 200. I don't know which one that is, but it would make sense because it went much above the 200-day, came down, and the 200 days right here, it will probably come back and test the 200 and probably go down again. So because we all trade in the short term. Well, at least I do. So there is even if there is a small hint of good news, or if the Fed does what the market is expecting, we'll probably see a bounce higher. And that's what I'm looking for right now. If it breaks down, we don't have a lot of positions where we could lose money. So we'll see.
So what you're saying is like there are very tiny chances to break the 200?
No, I mean, it's already below 200. So
Yeah.
So it could go test the 200. So there are different ways to look at 200 or any moving average. What is moving average? Moving average is nothing but the smoothing mechanism of this entire price, right? So 200 day is almost 1 year average price. So I think we have 220 days, I think. So 200 days is about a 1 year average of the market. So if you look over here, right, we had a move lower. So this is from here to here. This is the only place when this 200 days started moving lower. Okay, and so far it just started to turn to go lower. So far it has been moving higher, and it's turning lower now. So when it turns lower, generally, you will see the market go higher, test it out, and it cannot go down every day. I mean, we had again, when you look at the weekly, April looks horrible. Look at that.
Yeah.
1, 2, 3, 4 weeks, horrible, horrible April. So that's why I think we will probably see a bounce because it's oversold, and probably test the 200 and probably move lower again.
Yeah. So yeah, you said it will test and move lower again, right?
Yes,
So what I was asking is like, so there are very tiny chances to move above 200.
Again, nobody knows.
Yeah.
Nobody knows. Well, I will tell you the bigger problem right now. So far, okay, whenever there was a correction, even in 2018, 2001, all these years, right? What was Fed doing? Fed was cutting rates so that there will be growth in the market, right? I mean, most of this period, or in 2008. But this is the first time, while the market is moving lower, Fed is increasing the rates. So obviously there will be a contraction in the economy. And institutions, they don't sell when everything is so oversold. They only sell when there is a bounce. That's how those bounces are being sold. So, and one of the easiest way to look at, I mean, that's how I see it. Have the levels, okay, and I keep these so that I don't forget about this. So it came down, it bounced for a day and failed the next day, right? So these are the important levels. I mean, you just need one level at a time and figure out what to do with it. And right here we had rejection 1, 2, 3, 4, and on 5th day we got a big reversal. This is when I totally got out of the market. This is where Palo Alto Network, turned around and made a very big down day. So, I mean, we can always see these in the stocks that are leading. Whenever the leading stocks are turning around, there is nothing else to be in at that time. So, for me, the easiest way to look at this any market is have a level, see how it's behaving at that level, and trade based on that. I'll tell you one more just about the levels, right? So right here, 970 or 980, whatever. 1, 2, 3, 4, 5, 6, 7. It tested 7 times and it broke. And that's the reason we got the big swoosh, because nobody wants to buy when it's breaking a support. There are more, obviously there are more people shorting and also getting rid of their own positions as soon as it broke this 970 level. That's why we get this big move lower. All right. So, and Russell, I really wanted to keep Russell for a while, but I had a pull position, but I'll probably get back in if the market moves lower. But Russell looks horrible, really, really horrible. I mean, it moved sideways, tried to break out, came down, went up, I mean, this is still in the inside the range. Okay. Broke lower. That's it. It on this day I was saying that we might be the buying might be broader now. And what happened? It stayed there for 1 day. That's it. We got more sellers. Now it's breaking out of this consolidation. So the best thing or the best trade for Russell right now, or the easier or least resistance movement, is to the downside. And we talked about this plenty of times. When you see something move like this straight, it's easy to move during this period. It's easy for the stock, or anything, to move back to that 1700. So 1700 is probably the next target to the downside.
So,
Go ahead.
KP, we're talking about the Russell, right?
Yep.
Did we had Russell like in the past, like for more than a year, like moving sideways?
I can't remember. I don't know.
Yeah, because
I'll look into it.
it's been like
Okay.
I think 15 months now almost.
Well, I mean, it's not moving sideways anymore. It's
I
moving.
mean, yeah, it's down.
It,
Yeah, I mean, yeah.
yeah, it's. So we got a resolution out of this. So this is not important anymore. This is not important anymore at all. It's done.
Oh, yeah, because it has
Yeah,
moved.
it's broke down now. This is your level. This is the level that, or the zone that we are supposed to watch, is this zone. So if it breaks down lower, below that 1880s and start moving lower, that will lead to 1700, is it? 1704. So it will probably, or even 1654 is, which makes more sense. So it will probably come all the way down to 1654. Well, crude, I still don't know what's happening here. But what I mean by that is it is moving sideways. So if you ignore this one, that's a panic move. So it has to either break higher or break lower. If this is very important. If Fed is really hawkish, and there might be, I mean, if they say that we are gonna do 275, whatever, very hawkish, and in their statements they say that the next few months we are gonna hike a lot more than what the market is expecting, crude will go lower. And one of the reasons I got into GDX puts is because if Fed becomes more hawkish, gold is going to go lower. No more inflation. It depends on, so if Fed is more hawkish, gold will go lower, crude will go lower, and that means that market is pricing in recession. The only time when you see all the commodities go down is when the market starts to think about or price in the recession. So I thought that's what it was doing yesterday, but GDX, it went up today. But I mean, this could still go down. So, but again, I don't like to lose money, especially in the market like this. I don't want to give more leeway to any of my losses. I'm getting out as soon as possible. What else is there? I guess that's it. Let me know if you have any questions. Let me see if I have any questions here. Yeah, somebody was asking me, so do you guys understand how I'm doing the butterflies and ratio spreads and everything, or I can go through anything that you guys want, how to place the order, or anything, because that's what I'm doing mostly.
KP, I think you said you will have a video, right, on this butterfly spread, ratio spread, and everything.
Yes, I That might take another week or so.
Yeah, I think that if you ask me personally, for me, it's okay, but I think it's better to have that video for
Yeah.
me.
All right. All right. Better than no. All right. Sounds good.
Not so good, not sure about others. Yeah.
Okay, so KP, I sent you a few questions.
Yep. Mandeep. Oh, well, actually, well, I did cover the things, but I can talk about this. The profit taking.
Yep.
Okay. All right. Go ahead.
I can go back and watch if you have already covered. I can go back.
No, I mean, it doesn't take a while. I mean, what I was saying is, actually, I did not explain everything I wanted to anyway. So let's say if you have a 30% return is your goal, or even 50% return is your goal. So you have to figure out, do trial and error and figure out on a good trade, how much you are making, and on a bad trade. So let's say you want to make, just to make it easier, 30% over a period. Okay. All you need is 30 days where you make 1% on the portfolio, which is not hard if you are, fully invested, obviously. And the rest of the whatever 170 or 180 days, you just have to go break even. So for that to happen, I mean, this is definitely not the an amazing environment to be fully invested. But when we are back in the bull market, I think that calculation will help you a lot. Right now, for any position, I'm probably on a good position. I'm probably making 0.2 or 0.3% return. That's it. But because I'm doing a lot more, because I'm not waiting for a bigger moves at all. I mean, anything that moves 3-4. I mean, right now I'm not even trading stocks anymore because most of my swing trades, they are killing me. I mean, so when I do options, I take smaller profits and then I move my calls or roll my calls to the upside if it's working well until they don't work. So that's what I'm doing right now. And I do not know when this environment is going to change, but until then, this is what I've decided to do. So you need to figure out how much percentage on each trade, whether you lose or make sense. Let's say if you're making 0.5% on a good trade, right? And if your goal is to make 30%, you need 60 trades. And everything, and the rest of the trades, all of them together, they have to nullify each other. So, but that is something that you need to figure out how much size would make more sense. And the reason I go 1/3 is because that optimally works better for me. And as you said, sometimes if you buy only one, I would always encourage you to buy more than one. And if you are buying just one and that's too expensive for your the amount of money that you would put on a single trade, you should probably do a vertical spread. So, or even if that's a lot, sometimes, for stocks like Tesla or even Amazon, right? I mean, whatever works better to have more than one contract. So if you are unable to do a single or a single contract, or naked call or naked put, you should do a vertical spread. If that's also expensive, you should do a butterfly. Does that make sense, Mandeep?
Yep, it does.
So in a way, I mean, doing complex spreads, you would be much more safer than doing straight naked calls. And right now, one of the reasons I'm doing naked calls is in place of stocks. If there is a big correction, I know how much I'm going to lose. That's it. because we have seen the volatility sometimes on news, stocks go down 6, 7, 10% in a single day. And most of my average stop is around 6%. So any other question? Guys, also let me know if you want me to look at any other tickers.
So KP, could you please show whenever you have time, maybe some next time, to put these type of trades like vertical spread, butterfly.
Yeah,
We want
yeah.
to see to put. You can show us one or two, then it will be helpful.
Yep. So while I'm doing this, when I'm doing the trade, check out the trades, and I'm going to make the video, but it's easier to understand while I'm posting those trades. So if you see me, if you see me post a trade, and if you don't understand, I can always copy and paste those trades. So, but I will. Somebody else also asked me about the video about the trades. I'll do one, and that will help for everybody in the future. Did you get a chance to look at the ratio spreads video that I sent you? I mean, was that any clear at all?
Actually, I have to see it more.
Okay.
2-3 times I have to see it, then I will understand better.
In fact, that's what some of the members told me, that every time they watch, when they watch multiple times, they understand it better. And to be frank, I mean, for me to get used, not just understand how to place the trades, but the ratio spreads, it took me over a year to get comfortable. I mean, I did smaller trades for a long time. Then now, because I will explain what I mean by that. So now we do have this trade, right? 350, 345. So when you place this trade, just let me go through this. So you're getting 71 cent credit. And let's say, how much should we do? 15 to 30. For me, I have this portfolio margin anyway. So it says I have I just need only 13,000 as a margin required to place this trade. But the thing is, it says maximum loss of 500,000 for this trade. What that means is SPY has to go to zero for me to lose that 500,000. Okay, which is not happening. So those are the things that we have to get used to, thinking. So what are the probability? I mean, the only reason I did this one is because for it to break 345, unless it breaks 345, we are not going to lose money. And we have about 28 days. For S&P to break this 345, S&P has to go down 18%, number one. The second point is, if it breaks 345, what you could do is, for this one, right, 45.90, I can roll just this 345 call to the next week. How much is that right now? 85 cents, okay. So, or maybe a couple more weeks, I guess. I can roll that to June and get 305 calls. Let me explain more. I guess this is a little complicated if you are not used to it. So if this closes, okay, on the last day, if it closes, let's say 340, okay, you actually make $5 right here. Plus you are short 345. So you will make this $5 here, and you will roll this 345 down to the next few strikes or expiration dates. Does anybody understand what I'm talking about? you know what, I'll probably do a video on this and explain this better. So ratio spread is nothing but a vertical of 350, 345 plus your short 345. So you have a vertical put of 350, 345, and which are both 45 contracts each, and also you are short 45 contracts of 345. So if this closes below 345, you are actually making $5 on this, on each contract for the first vertical spread. However, for the other 45 contracts which you are short on 345, that is something you can roll it down. And one of the reasons you can do this with S&P 500 is because this is not going to go to zero. Okay, you can roll it for a while, and we are being very, very, very safe when we are trading something like this. So, but anyway, you know, if you guys have any questions on these things, you know, post it and I'll try and explain again.
Sure. Thank you.
KP, did you post any video explaining ratio spread? You just said a couple of minutes back.
Yeah, I did. Oh, hold on. I sent it to somebody. I'll put it back.
Was it in webinars?
Yes.
Chat?
Yes.
Yeah, I don't know if I think I missed it. Like,
Yeah, KP, you sent to me. This is right.
Yeah. I'm gonna check and I'll send. I'll put it in the webinar channel again.
yeah, thanks. Yeah.
Okay.
Questions?
Thank you.
Sure.
Have a good evening.
I have a generic question if no one has any specific
Yeah.
tickers.
Go ahead.
Yeah, so I don't know, like I just wanted to hear your thoughts. So there are like many mega caps, or like there are many stocks, right, that went from $100 to $500 and again came back to $100. So in the last couple of years, like institutions, like, you know, and many analysts, they are bullish, you know, everyone was buying, and then it you know, it went to 500 and again it came back to 100. So what are your thoughts on that? Like, so what, I mean, were they just saying just to make money, or like, you know, because it was you know, I was still thinking, like, you know, what was going in the last 2 years. I know, like, you know, the trillions of dollars, but other than that, like, yeah, go ahead.
First thing, you are assuming that they know how to value a company. They don't.
So everyone, yeah. So yeah, like fundamental traders, yeah, they are still sitting on it, right? So I don't think fundamental traders would have sold any of those, right? Like, let's say Roku, 100 to 500, still again it came back to 100, and I don't think fundamental traders would have, you know, at least if not all of them, some of them might have sold, but like most of them still holding, right?
They will be out of business.
Yeah.
They will be out of business. If they don't sell, they're going to be out of business. That's it.
Yeah. So why the analysts and institutions, they were all bullish in, you know, in the past couple of years? Like,
Well, as I said, you know, people who survive, they actually change with the environment. I mean, you do know that 80% of the managers, they don't beat S&P 500. They haven't beaten for the last 20 years. They did not beat S&P 500 for the last 20 years. So there are only a few people, because they do certain research, they do the trades based on that fundamental analysis, and you know, it doesn't work. And because they have 30 or 40% of their portfolio in a single position, they'll be out of business. And then that happens all the time. I'm telling you, I mean, now we are not hearing that any of the funds are not being, you know, closed yet. When this bear market is over, we will see a lot of funds. You will see on CNBC saying that, you know, this all the names of the hedge funds that are out of business.
the Melvin Capital, right? It already came out.
Well, I mean, they were gambling. That's horrible. What they were doing is definitely horrible.
They're closing and reopening a new fund, right?
Yeah, well, I don't know how many times they're going to do that, but yes. Yeah. People who are relying on them, they are stupid, obviously.
So when they close, like, what does it mean? Like, so do they have to
The clients
close
lose all
all
the
the
money.
trades?
The clients lose all the money.
So they don't have to close all the trades when they close the fund? What does
They
it
have
mean?
to. They
Yeah,
have to.
so,
They have to. They have to sell and give back whatever money they have, and
so
give it to the clients.
whether
And
it's short or long, they have to close all the trades.
of course,
Yeah.
but the big money is not okay. The big money is not with these hedge funds. The big money is with the mutual funds, who are long all the time. So they go through these 50% corrections there, and they come out of it. And our idea is not to do that. If you are not part of this correction, if it turns around, and obviously this is square, but uh, but again, all the stocks that went down like this, they went up because of the pandemic. So I mean, show me any stock that has not made a lot of money during the pandemic, then that went down like this. I mean, anything that and obviously they have to be a little bigger, more than 3 to 5 billion at least. So most of the stocks that went down are the ones that went up during the pandemic.
Yeah.
And there is a good possibility they may never come back, or it might take 20 years for them to come back. That happened during .com burst.
Yeah, there are many stocks lost 80%, 90%.
Yeah. But the best way for us is to just follow the trend.
Yeah.
When something is not working, get out. Simple, very simple. Have a level, stick with the level. Okay. And if it's not working, get out. And there are always trades in the market. I mean, there are even during recession, right? I have been saying this, which did not really work for me, but look at Dollar Tree. And this Dollar Tree, Dollar General, they thrive in recessions. Even Walmart, it thrives in recession or impending recession. That's what everybody buys, because no matter what you do or do not do in your life, you still have to go to Walmart to get the stuff.
Yeah. So, what are your thoughts, like, trading based on fundamental? Is it
That's
still
not for
good?
me. That's not for me.
I know you don't do it, but what are your thoughts? Like, is that still good going forward, or because looking at this market, at least to me, it looks, it's not good to trade based on fundamentals, right?
That's
Because we are
I
because we are
wouldn't I won't
yeah,
even know. I won't even know because I don't do it. I
yeah,
never cared about it. Mm. First, my thought process about the fundamental research is, I don't have Fidelity does fundamental research, right? And they make a lot of money for their clients, and they are probably one of the best out there. Okay, but they have the resources. They actually talk to the CEOs. They talk to the suppliers. They talk to a lot of people. They come up with certain solution, right? I mean, whether they should invest or not. And we are just following them when we are doing technicals. And when a retail investor says that, he whether that he is doing fundamental analysis to do is investing, I'm telling you that's bullshit. I'm sorry, but the reason is you don't have all the data.
yeah.
You don't have any resource what the big guys have. So how are you doing your fundamental analysis? I mean, uh, are
Yeah,
you
even the fundamentals might have changed, but it's not exposed to the public, right? So we may not even know that.
well, I mean, if you ask them, they'll let you know. But do you know whom to ask? Do you
Yeah,
know
yeah,
who
that's
their
clear.
clients are? So, I mean, that's how do you think Apple trades so well with the market? Because there are hundreds of analysts watching Apple, calling all their clients and sorry, all the chip makers, or they're tracking all the orders. Uh, so those are the metrics they use to figure out how much they are going to earn, and how many orders of chips they have placed. Based on that, they decide certain number of phones will be manufactured, and that's how they come up with the number of, okay, this is going to be their revenue and this is going to be their profit. And even with all that information, Apple surprises them all the time.
Yeah. Yep.
If I mean, there are some of my friends who ask me how to, if you don't have time to do all this, the best thing to do is to just put your money in S&P 500. Believe me, I mean, this took me a long time to get here, but just putting your money in S&P 500 and NASDAQ will probably make you more money if you don't have time.
Well, yeah, that's what I was thinking. Like sometime in the future, SPY and QQQ, right?
Yep.
Yeah, that's what I was thinking.
You won't make a lot of money, but you will do better than many people. So it depends on what your goal is. Let's say if your goal is to make 30 or 40% a year, or let's just say 25% to make it easier. Now S&P gives you 8%, 8 to 9%, probably 8 to 10% year over year. So if your goal is to make 8 to 10%, there is no point in doing all this. Just put your money every month in S&P 500 and it will work out for you in the long run. That's it.
Premium from the covered calls too.
Yep. Yep. Actually, there is a strategy where you can, this was a long time ago. I mean, it works well now. So every month he sells, every start of every month, he sells the covered calls, which are 10% away from the current price. That's what he does. By doing that, he makes about 10 to 12% off his profits more. So if he makes about 10% on SPY, he'll add another 2% to 1 to 2% to his profits. So
yeah, I think I know that it says like some strategy. I don't know.
Yeah. But again, it depends on what your goals are.
Yeah. Yeah, I mean, yeah, with another full-time job, this one is very difficult, right? And especially when everyone is when all the employees are calling the employees back to office, then it becomes, I mean, we cannot even do that. So
Let me stop the recording.